This program is brought to you by Real Estimate, Australia's #1 property value estimate. Get your real estimate today on realestate.com.au.
It's great to have your company here on Business Now. Well, let's take you around the country in the housing markets, where a broad expectation of an interest rate rise in the coming months seems to be just bearing down on the buyers a little bit. So across the nation, REA Group reports 1,458 auctions over the weekend. 58.6% of those were sold, sort of coming off a bit. In Sydney, just 495 auctions across the week and a clearance rate above 61%. There were a further 1,507 private sales. In Melbourne, though, 538 auctions. That's probably a few less than you'd normally see. 60% of those were sold, plus a further 1,046 private sales. In Brisbane, 80 auctions, just over 53% of them were sold, and 1,036 private transactions. In Adelaide, 76 auctions. It does remain strong there. 71% were sold and 258 private sales during the week. In Canberra, 36 auctions and 61% of those were sold, and a further 110 private sales. And in Perth, 5 auctions and 584 private sales last week. So let's bring in here Anne Flaherty, economist with the REA Group, who joins me. And look, it's important to actually study this stuff because it says something about just the tone of these markets and where buyers perhaps are starting to feel a bit of pressure around the place.
Definitely. It's a really good metric to say what's happening in the market right now in terms of confidence, in terms of how buyers are feeling. And it's been quite interesting to see that that auction clearance rate has declined a little bit. We actually saw a relatively weak result over the weekend. We have been seeing in the low 60% for quite a while now. To see that dip below 60% was really quite interesting.
Okay, so the issue here is, number one, is it doesn't seem as though there's more properties hitting the market. It seems as though maybe potential buyers are a bit more reserved as to what they're prepared to pay. But that could say everything about the publicity right now about the prospect of further interest rate rises in the future.
Yes and no. While we have seen the total number of homes hitting the market decline from previous months, we're actually seeing quite a lot of homes up for sale compared to what we typically see for the time of year. This is particularly true in Victoria, where we actually saw over 20% more auctions this weekend past compared to the same weekend last year. And actually Victoria had one of the weakest clearance rates compared to where it normally sits. So Victoria, you normally get a clearance rate of about 70%. It was down at 60% over the weekend. And I think, as you mentioned, I think nerves around what interest rates could do over the coming months could be impacting buyer demand.
Okay, but that could also be that Victoria's in a bit of a funk at the moment in regards to not only increased taxes, property taxes on investors, but then also the increasing land taxes that many people will have just recently been hit with. So all of this is almost conspiring. That said, though, Victoria probably has some of the best performance in terms of building new homes as compared with other states right now.
Exactly, and it all depends on who you are. If you're someone who owns in Victoria, absolutely, especially investors, they've been hit by big tax rises, lots of compliance, and we're continuing to see a lot of investors sell in the state. And if we look at the performance of Victoria compared to the other states over the past year, we haven't seen prices move, which is in really stark contrast to what we're seeing in other places where property prices are hitting new highs.
But the interesting part about this is it's actually property that's potentially causing interest rates in the future, if they are to rise. And that's because rents quite clearly have been increasing so rapidly because of a shortage of housing stock. And so because that's pushing up rents, that's also pushing up the inflation rate.
Unfortunately, you're right. We do know that housing costs, of course, are one of the inputs into that cost of living. And the fact that we are going to continue to see rents rise is not good. It means that households are going to remain even more stretched. We know that the average household savings rate has been declining. It's sitting at very low levels. So the fact that we would anticipate to see further rent rises off the back of that shortage of rental stock on the market means that situation's likely to remain over the foreseeable future.
Yeah, so it's not likely to improve is what you're kind of saying at this stage. If anything, it's probably likely to get worse, and especially if rates do rise. Tell you what, always good to have in the program, and many thanks for your time today.
Thanks for having me.